Hi all, welcome to TCM Education. My name is Michael and I'm the analyst here on the channel and also the content developer, as much as we can call this content being developed. I mean, the US equity markets are taking care of business. We have plenty of content. It just needs to be packaged and delivered to the right audience, obviously. This video is strictly for day traders. It shows how weird the markets act from time to time. Yesterday, for example, and I will show you in a minute, 4 stocks among the worst in the market delivered unbelievable reversal long plays without the market doing anything. They had no connection sector-wise or any other reason to reverse from the lows. They didn't do it together, but four out of 6 that I was watching, that's a lot. It's not that we haven't seen weak stocks deliver great moves lower, but those trades from support, which is a tested level at the lows of the day. Take a look, for example, at this CRI. The worst performing stock yesterday above $10. So the stock dives like 30%. Terrible earnings. Moms and pops are saving on children's clothing, or they can buy it, without the brand somewhere else. That's Oshkosh, and obviously I don't remember when my daughter was very young, but you like to buy brands. Brands are off the table. If burritos are off the table for the American consumers, so CRI with the pressure that consumers have with inflation and the tariffs that this company is facing moving forward, that was obviously a big blow to Carter's. So the stock took a 30% dive, but then the buyers found their way. You can see this amazing reversal pattern from the lows 2350. So the stock sits here. If you are a day trader, obviously you're looking to short. It's a bear flag formation, but it doesn't breach the 2350. This stock is sitting there for an hour. At one point you need to understand that it's not going to breach, and it's did its work on the downside, moves up 11%, nearly 12% in 5 hours. So this move, if you take into account this move here, it can be a huge winner. All you have to do if you enter the trade, 5 cents above 2350, 10 cents above 2350, 20 cents above 2350. I mean, anywhere you enter with a reasonable risk, of course, this is a huge win, and all you needed to do is basically nothing, which is a strategy for long trades. Do nothing, let the market do it for you. How many, if I ran a poll at 2350, how many would have said, yeah, it's going to move up 12%, never breach the 2350? Including myself, I would have said, no way, Jose. This is still a short play. So you wait an hour, it's not a short play anymore. It turns into a huge winner. So again, you need to observe. And in this case, the trade was so accurate. Shame on those who didn't trade it. And again, I have to say, not very easy to observe though. And bring yourself to buy the worst stock in the market. So that's a CRI on a beautiful reversal. Let's take a look at KSS. Plenty of action this week on KSS. Guys, thanks who supported us on our KSS short squeeze article. But come to think about it, we need more from you. It's never enough. So do like and subscribe to our channel. It's important to us. We are only 2 months on air, and we need every subscriber. Thank you. Anyway, same pattern, not as great as a CRI. So here we have a double bottom support at 1250. Keep in mind the round numbers are so important. The number in Carter was I think let me go back to Carter. It was 2350. So 2350 in Carter, and guess what? 1250 in KSS. Okay, so the result is not amazing, but still 3-4% to the upside from the lows, risking 1%. Any trade where you make 3 to 4% on your risk is a great trade. Now you can buy it at 1255, 1260. That's a 1% risk. You can still get 30 cents, maybe 40 cents. If you wait until the close, it just took 1% of the profit in the last minute. Anyway, the concept is you need to observe the chart. If you observe the chart, you can act with very, very little risk. And this is very important, because as a day trader, if you make 2-3 trades like this, risking 5 cents here, 10 cents there, which is less than 1% on 99% of the trades, and you get from those trades 3% and another 4%, that's 7%. On a $20,000 position, 7% is a lot of money. Just working you around and just observing the right trades. And if you fail on those trades, and obviously there's always a chance to fail, especially when you're buying losers, you fail very, very small. And keep in mind also, there is a benefit of buying losers. Losers are the worst stocks in the market. Sometimes they are the best trades, because somebody, and that somebody is obviously institutional investors, are thinking they're cheap, they're going to put money to work. And though if those guys are putting money to work, it's not for 5 cents or 10 cents. They're putting money to work for sometimes for weeks, sometimes for months, sometimes for more. That helps. Okay, let's move to number 3, MBLY. MBLY took a dive yesterday, or a beating, let's call it, not a dive. It was more than 5% once upon a time, losing more than 5%, but you can see here it's not 1350 or 1550, here's 1440, a perfect support level at the lows of the day. Same criteria, you buy it at 1450 or 1445 or 1441. I don't want to exaggerate, okay, but 1445 is viable, 1450 is viable. That's a 10 cent risk, and it moves 3-4 to 1 in terms of risk reward. Again, you add with very little risk trades to your profits, and it doesn't necessarily need to be a $100,000 position. It can be a $20,000 position, and you add three trades or 4 trades totaling 10%. On a $20,000 position, 10% is a lot, and you do it methodically with very little risk. And if you fail, worst case scenario, you fail, you have 0.5% to 1% risk per trade. That's negligible, and you're not going to fail on 4 out of 4. One good trade is enough. Okay, so that's number 3. Number 4 will be a little bit different, but we can still learn from it. Let's take a look at GLXY. That's Galaxy Digital. I didn't know anything about this company. It's also kind of a Bitcoin bank, or Bitcoin heaven, or Bitcoin stash. I don't know how the options. So the one of the headlines was Galaxy executes one of the largest notional Bitcoin transaction ever. But what does it mean, notional? I don't understand, but actually this stock sold $9 billion worth of Bitcoin, and the headline is Bitcoin falls 3% on coin market cap. Anyway, So they sold 80,000 bitcoins. Okay, let's take a look first at the daily chart to see what we are dealing here with. Clearly on a YTD chart it's a clear winner, a bit volatile but a clear winner, especially with a Bitcoin going places lately. Hold on a second. Lows of the year 17 traded double of that the day before yesterday, and yesterday a sell-off, nothing spectacular. That's the first time that I'm observing actually this company. Volume was nearly 10 million shares, had a nice market cap, plenty of liquidity, although total shares are nearly 400 million, the float is less than half of that, which means that the liquidity will improve over time. If you know, let's see when this stock was IPO'd. It was IPO'd only in May 12, 2025. Okay, so that's an IPO. I don't know why I have a clear IPO list, but I don't think this stock was in there, or maybe because there are so many I didn't pay attention. Let's go back to the chart and then we'll go back to them and spend some time with the IPO list, which got some newcomers this week. None of them in the technology sector though, maybe one. So the idea here is, okay, the stock is taking a beating, moving down, but then, and this is easy to see relatively, it starts to build this uptrending channel. You can clearly see higher lows and higher highs, and you must join at one point. The question is, where do you join? Do you join at 29.50 or do you join at 30? Because there is no like entry point here. It's wherever you observe it, it's an entry point, and you need to deduct the risk. So the risk here is, if the risk is 1%, you deduct 30 cents. If you want to take more risk, you deduct more. So again, if you observe it very early, it's very helpful. And you fail with 1% of risk. If you observe it very late, in this case it didn't matter because the trend changed already with this beautiful pattern. So again, easy to observe, not very easy to observe early. So it's not, and the drawback, you don't have an entry point. You have to work your way around an entry point. Again, it's not like it is a fast moving stock or anything like that. It's not CRWV or CRCL or anything like that. So it could have been a great trade for those who were observing, and this is 4 out of 4 stocks that were worst performers and turned. This one moved from 29 to nearly 31. That's $2, not quite $2. Let's call it $1.50. That's 7%. Again, little by little, 7%. Out of the 7%, you take 3% on this stock, 2% on MobileEye, 2% on KSS, and you have a home run with CRI. You take their 10%, and the numbers are staggering. The numbers are piling up, and you have 4 losers. Okay, those 4 losers wipe up 4% out of those 16%. You end up with 12% on a $20,000 position. That's $2,000. Whoever's doing it or not doing it needs to take it into account. Okay, guys, I think it was, I hope it was illuminating enough. Do get in touch with us if you need or want to go to one of our mentoring classes, which is basically focusing on these type of trades, low risk trades, everything manageable and repeatable and doable. Thank you for being here with us. Do like, subscribe, and hope to see you in our next video.